Rockefeller, y'all.
Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is October 5th, 2019. Wow, what a classic here. Sarge Crypto, thanks for the song request. Jigga Man, Can't Knock the Hustle, off that classic first album, Reasonable Doubt by Jay-Z. What's going on, people? Hope you guys are doing well today, and welcome to another episode. Today, we're going to be talking about the one article that I didn't have time to go over yesterday, which was about Ethereum. And I think this programmer was, he expressed his concerns regarding Ethereum and the project's future. And, you guys know I've been very critical of Ethereum for over a year and a half now. Just saying that I didn't see the scalability there with the blockchain. And, they actually, the founders came out at, I think, DevCon or something this past couple of months ago or whatever. And they admitted that they designed Ethereum and it wasn't designed to scale. And so, they're working on Ethereum 2.0, but that's like a year and some change. I would say even 2 years away at this point, which is light years in the crypto space. But again, we're going to get some feedback from a gentleman that is qualified to talk about Ethereum in this manner. So we'll take a look at that one out of the Bitcoinist. And also, I saw this hit the news wire yesterday. Stellar. I just talked about Stellar over the weekend, actually, in my Ask the Block episode number 6. Stellar burns half of their tokens. This is crazy. The token price went crazy today. It shot up big time. And at this point, we'll take a look at the heat map, but it's up heavily today at this point. So we'll take a look at why they even decided to burn half their supply and what does this mean for the future of XLM. And then lastly, we got to take a look at this issue. And I said I would touch on this today in my video yesterday, but EOS is having huge network congestion issues, basically from a dApp that was deployed that, people are utilizing the REX to exploit this dApp and get basically free money from this token. It's essentially the way this EIDOS project or dApp was designed. You essentially can mine on top of EOS for this particular token. So we're going to take a look at it. And the maker of this EIDOS, I think, is a person who's he's an Ethereum person. So testing he's really pushing the envelope with the network, which is good. There's been a couple of suggestions on workarounds that have been brought forward, but the community has to come together on how they want to fix this. Block One so far has been silent. You've got Dan Lammer, he's tweeting out talking about EOS 3 and people are getting at him about that, but it's something that will be fixed. Again, there are a couple of solutions for it, but I definitely want to cover it because it is making some people very upset in the EOS community at the moment because they can't move funds out of the REX, can't move funds and do things on the different dApps. And you may be wondering, like, why is EOS price moving up? Because today it's up almost 6%, and the reason is because typically people would rent CPU RAM resources from the REX at a cheaper price and run their dApps and everything. So now people are having to go out and outright buy EOS tokens to run their dApps and so on and so forth. So that's why we're seeing a bump in the price of EOS with this freeze, this congestion on the network. And again, we'll take a look at the details on that in a second here. But I have to bring to everyone's attention, I'm sure you've already heard, any of you who are followers of me probably know who Big Weir is. Unfortunately, he made mention this morning that his youngest son, Toby, took his life. And, it was a shock to everyone. Everyone's out there on Twitter giving him love, showing him as much support as they can. But it's a very sad situation, and it's crazy because I was literally talking to my wife 2 days ago about, she gave me a statistic about like the youth. I don't know what age group. I think, from grade school up to high school, suicide rates are up 50% this year. And I think it's a lot to do with social media. These Instagrams and all these various platforms where these kids see a lifestyle and see these other people and and it you know, it paints this picture that everything is perfect in life, because that's the only thing people really put on Instagram. You don't see people really putting, oh, I'm depressed today, oh, I don't feel like I can make it today. No, everybody's always flexing on the gram, and you know, everything is always good. So it's just important that you try to educate your kids on that fact. Again, I don't know what the particulars and details are with the situation, but my condolences go out to Bix and his family. Very sad situation, and show him some love out there, people. But let's get into it for today. The heat map: we've got Bitcoin down almost 1% to 9,362 bucks. We've got Ethereum up 2% right now to 190 bucks. EOS, as I've stated, is up almost 6%, 5.5%, I should say, to $3.64. That buying pressure from the Rex being kind of locked up at the moment. People are having to outright buy EOS tokens to stake their dApps and do various things on the platform. So there's a prime example of utility driving the price of a particular token. Unfortunately, it has to be under these circumstances, but you know, like I said, we'll take a look at the details with this. I think things will get hashed out. Algo up 14% today to 29 cents, and we've got, look at this, XLM up 19% today. Again, another article we're going to take a look at regarding why this is up. It's basically because they've burned half their tokens. Interesting day in the crypto field. And if we take a look at the technicals for Bitcoin, you know, we're still trying to play out that D wave on this pattern here. We're getting stuck under this 94.64 area. We tried yesterday while I was actually recording and could not break through that area. I told you, if we could see a half a day, which was right here where my marker, where my mouse is, we didn't even do 1 hour above that line. So we closed 1 hour here, the next hour back below, and every hour after that on the candles here, we've closed below this 94.63 area. So still not bullish at this point. We've got to see a move above this red line. Now, if I draw a trend line, I'm seeing right here, you can draw something like that. This will give us essentially a pennant forming here, as you see, and maybe we'll get a breakout to the upside. Of course, that's what we're all hoping for at this point. At least I think I'm hoping for it. For my portfolio overall, yes, I'm hoping on it, because you know, we all know that Bitcoin dictates pretty much where all the altcoins go in general. I don't know as far as the algo if we're long or short Bitcoin, but I know we're in a position in both Bitcoin and Ethereum at this point. Just don't know which direction we are right now. So let's go ahead and take a look. The first article out of Cointelegraph: will stellar $55 billion XLM burn trigger a new bull cycle? I'm just trying to figure out why they even did it. Was it primarily and solely because of price? Did they want to just get a bump just for no particular reason, just an arbitrary burn? I'm not sure. Let's take a look. It says on November 4th, Stellar Lumens announced the completion of a 50% token burn of their total supply. This led to the destruction of 55 billion, I was going to say million, but billion XLM tokens. And the Stellar Development Foundation explained that the token burn was designed to provoke efficiency within the Stellar ecosystem. What the hell does that mean? The price of XLM surged 25% after the announcement. This triggered the market to become bullish on the altcoin, given that a growing number of altcoins are beginning to produce noticeable returns, and analysts of the technical aspects of XLM warranted. So this move here completes a full retracement, the analyst says. But you know, what you have to understand is, and I've said this many times, technical trigger points on a chart can only make a token go so far before fundamentals come back into play. Fundamentals is the overall moving force with any asset. So it's going to be fundamentally, what is the project doing? If we're talking about, you know, cryptocurrencies, what is the overall sentiment in, Bitcoin and stuff. So the fundamentals mean overall more than what a technical move up or down does for you. So just keep that in mind. This was solely done off of the burn of tokens. So the new price point may be a little bit higher, but over time, if things don't, if the sentiment doesn't change with, you know, the demand for the XLM token Stellar, if that doesn't continue to increase, then you'll see it fade back to the mean. We'll see what happens with that. You see that in the chart there. XLM is the only dark green one in this heat map at the moment. So next article, guys, is out of the Bitcoinist. Ethereum will become more centralized and dysfunctional over time. This individual says, I guess he's a developer, a Bitcoin developer. Thru recently took to Twitter to once again express his concerns regarding Ethereum and the project's future. Ethereum is still the second largest cryptocurrency, it says, with a current price of $184 and a market cap of nearly 20 billion. At the same time of writing, the coin also has a daily trading volume of about 8.9 billion, which makes it the third most traded cryptocurrency around the world. So, however, it says that while Ethereum remains the largest blockchain-based development platform, not everyone agrees that it is deserving of its position as it may seem. Bitcoin developer recently posted about the project on Twitter, expressing his concerns about Ethereum. According to Demeester, Ethereum's culture is antithetical to the crypto cyberpunk ethos. As such, it can only lead to the project being greater centralized and more dysfunctional, he says. And then he points out these quotes, these screenshots he put up. He said, "I see you apparently think that trust reduction is a cypherpunk value when really it's much closer to an essentially authoritarian attempt to shut down blockchain governance, and I just want to point out how wrong that is." So then Vitalik Buterin responds by saying, "No, Casper can survive 51% attacks happening once in a while. We can just delete the attacker's deposits and keep going." This is what your boy Vitalik Buterin said. Now, granted, this was said back in 2017. I think I actually remember him saying this. So Thru goes on to talk about how people often ask him why I'm such against Ethereum. He said, "Why do I go out of my way to point out flaws and make analogies that put it in a bad light?" He says, first, Ethereum's architecture and culture is opposite of that of Bitcoin, and yet claims to offer same solutions: decentralization, immutability, SOV, asset issuance, and smart contracts. Second, ETH is considered a crypto blue chip, thus colors the perception of uninformed newcomers. He then follows up by saying that I followed Ethereum since 2014 and feel a responsibility to share my concerns. In my opinion, contrary to its marketing, ETH is at best a science experiment. It's now valued at 13 billion, which I think is still too high. Now this third thread he put in here, I have to agree with him. The other ones, I'm not really sold on his arguments there. You know, talking about Ethereum's trying to be a Bitcoin with Bitcoin's not doing smart contracts. You know, I mean, there's a possibility of doing that type of stuff, but we all know that Bitcoin can barely survive on doing 7 transactions a second, or 3, or whatever it is. It's very low. So I don't know what he's saying on that tip. And so the article goes on to talk about how this is not the first time he's spoken out. It says that these and other thoughts expressed by Ethereum developers has caused Demeester to go on a anti-Ethereum rant in the past in late December 2018, and I just kind of went through the 50 tweets. I didn't go through all of them, but I went through a couple of them so you can kind of get an understanding of what he was saying back then. And then Vlad Zamfir also chimed in saying that Ethereum isn't a safe or scalable solution. It's an immature experimental tech. Don't rely on it for mission critical apps unless absolutely necessary. So in conclusion, despite the strong optimism regarding Ethereum, there are still issues that the project has not addressed for years. It goes on to say that there is also a real possibility that it may not address them in the years to come, which is one of Demeester's chief concerns. However, the worst case scenario, as he presented it, is that Ethereum will actually become more centralized and less functional as time goes on. You know, I don't know if Ethereum will become more centralized, and that what he's talking about, with the exception of that one tweet, is what I've echoed. But everything else that he's talking about sounds like a lot of Bitcoin maximalist talk and jargon that I'm not really cool on. I don't necessarily agree with this guy wholeheartedly. just the fact that I think that it's not scalable, and it is an experiment. Like, it's a huge experiment. And as I stated at the beginning, you know, the co-founders admitted that Ethereum 1.0 was not built to scale. And so now they're scrambling, trying to make this $15 billion project scale, all while it's running. So it's going to be a challenge. I'm not saying they're not going to be able to do it. I think they are going to be able to do it, but I think that time penalty is going to get them. I think it's going to take 2+ years for them to do this. And therefore, I think it's going to put them way out of pace with the competition. So that's how I see, you know, Ethereum. I don't see it necessarily dying. I see them eventually upgrading. But by the time they, again, get to that point, I think it's going to be too late, in my opinion, you know. So we'll see what happens. You guys let me know your thoughts about that. Is Ethereum going to last, or is it going to become more centralized? I don't know about that part. You know, I'm technical, but, you know, there's some smart technical individuals and coders in this game. I don't know exactly what he means by more centralized, or how and why it would become more centralized over time. But dysfunctional, yeah, maybe, you know, maybe. And last article is this congestion that's going on in the EOS network because of a exploit, a dApp that was launched by an Ethereum developer. It looks like they dropped it, basically a dApp where you can send EOS tokens and you get back those EOS tokens in addition to 0.01% of all EIDOS tokens. So it essentially was like an airdrop, but you were like mining. So we're going to take a look at the details of this here in a second. But it has caused a huge congestion within the REX program, the lending program. And this is a huge lesson learned. And, you know, once one of the proposed solutions is implemented, you know, I think the network will learn from this and get better from it. So it says that EOS into congestion. REX is the largest DeFi project, ? In the past 24 hours, we've seen a huge reduction in the resources available on the EOS mainnet. This is because the network has entered its congestion state, and users can only use the resources to which they are entitled to in proportion to the EOS tokens they have staked. This time, however, there is a stress test, but it is a particularly new token distribution that is causing a huge resource consumption. It is the EIDOS, formerly the Inumivo, is dead. Oh shit. A project created by Aidan Pierce, founder of the Inumivo, a project based on Ethereum, which apparently failed. Once failed, the project renamed itself to EIDOS and launched its new token on the EOS mainnet. While EOS users can mine EIDOS tokens by sending a transaction to the smart contract, with any amount of EOS, the contract will instantly send back, and all at the same time. It will also send 0.01% of all EIDOS tokens it holds. And as you can see below, this is crazy. The EOS.O token transfer dominated by in the last 24 hours by this token, this EIDOS token. And so currently more than 80% of the mainnet transactions are related to this dApp, this airdrop. Many wallets have created services to facilitate the EIDOS mining process automatically, and the EIDOS token is already listed on many exchanges. This huge increase in transactions and resources consumption have resulted in a significant increase in resource exchange, or the REX leasing program. In total, more than 77% is now higher than that. I think it's like 80% of all EOS, or 88% of all EOS, I think at this current time, have been lent out, and this has led to an increase in REX's annual interest rate to over 14.5%, which is crazy. That's unsustainable, of course. To be more specific though, guys, you know, REX uses the Bancor smart contract logic, and so this whole situation should have been able to be handled by the smart contract, by the Bancor smart contract, but they capped it as far as the price of REX. They capped so that it would not go to 1-to-1 with one CPU resource equaling one EOS token. So that's where the kind of feedback loop or lock gridlock occurred. Originally, the whole Bancor logic engine was supposed to let the price of that token rise as high as it needed to be to bring back equilibrium in the markets. It says the contract is set to mint 25 new EIDOS tokens every second, and then this will go on for about 15 months. By then, 1 billion EIDOS tokens will exist, and 800 million of those would have been given out to the community for free. This mechanism is considered mining. Essentially, people needed to rent resources from Rex to mine EIDOS. Consequently, the CPU became a scarce resource because there are millions of transactions going through. Rex noted a significant increase in returns, going from 10% to all the way 83% in just 3 days. But at one point, it reached a level of saturation. Result is that the network activity declined and a state closed to the system. Paralysis occurred. So that's where we are with things right now. I'm going to leave a link to this so you can really get a detailed understanding of what's going on. There are, again, a few solutions out there that are kind of going around, but we'll have to see what happens if which one ends up being implemented by the community. And yeah, that's crazy, right? Absolutely crazy that this one app got so much attention and so popular that caused people to exploit the Rex lending platform and lock up everything. But Telos, I have to give a shout out to Telos. They actually had a solution for something like this happening in the future if this ever occurred. They put out a solution. I'm gonna have Doug on in a couple of weeks here, but he tweeted and I retweeted it as well. So there are many solutions out there. We'll just have to see what happens. And some people are mad that Block One isn't stepping up, but should Block One step up? That's really the question. Should Block One step up, or should the community come to an agreement and figure it out? I personally think the community should figure it out and solve it themselves. That'll make the network even more resilient to these types of loopholes in the future, and consequently make the whole EOS platform, EOS.io platform, stronger than ever. So we'll see what happens. That's pretty much it for today, though, ladies and gents. Make sure you guys give some love to Sarge Crypto out there on YouTube for the song request. This is a classic. Jay-Z, Can't Knock the Hustle. Make sure you guys like, share, and subscribe, and click that bell to be notified about unbiased crypto news reported by yours truly, Crypto Blood. I'm out of here, people. Holla!